Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will take forward our work using the indicator simple moving average, and along with that we will also take the help of money flow index to figure out the opportunities in which we feel we are likely to end the trade on a profitable note. We have higher probability of making money rather than losing money, and that has been the purpose of this series involving various indicators. We try to figure out the formations which are likely to bring us money, and of course this is a representative setup. You have to add ideas and see how you can better optimize the trade setup. So let us now get started. This is the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the job of algorithm developments easier. You can use any indicators which are provided on the platform. You can figure out a combination which you feel is likely to be profitable, and then using that combination you can get the execution done on this platform. In the prior sessions, I had explained to you the instrument subscription where the Euro USD was used as the instrument of choice. Afterward, the position amount was defined at zero to avoid any kind of doubling down on existing positions. Then I had added these SMA blocks of the 1 hourly candle period with the look back period of 1 and 6 respectively to look at the trend of the underlying instrument. Then to figure out the oversold and overbought scenarios, we are taking the help of money flow index. We have two particular values, two particular levels in mind, 20 on the lower side and 80 on the higher side. 20 or below 20 will denote a condition of oversold, and if the MFI output is above 80 or equal to 80, that will be for us the overbought scenario, and we will start looking for some correction from there onwards. To look at the price volatility, we are also taking the help of these info candles or gate historical candle with the look back period of 1 for this hourly and 1 and 2 for these two 10-second candles. These calculations were carried out to define the stop loss and take profit. We are looking at the last hour's candles high and low, and whatever is the actual difference, we are keeping the stop loss and take profit in proportion of that. So for that purpose, these calculation expression blocks were utilized. And then on the lower side, we have this condition defined for the execution of the trade with the trade command block coming in at the last. Now let us start with the sell side. First, I will give you a refresher of sort of what the logic is going to be, and after that we will look for the execution. So this is the USD JPY chart. I will change it to Euro USD. Okay, so Euro USD. For sale, we need the SMA to be in decline. So we compare last hour's SMA output with the SMA output 6 hours back. And if it is in decline, that is the last hour's SMA output is lower compared to the SMA output 6 hours back, then we will start looking for the MFI conditions. On the MFI, we need the underlying instrument to have reached a overbought scenario. That means there has been significant correction from the lower levels recently, and not only that, it should have spent at least a couple of hours on higher side. And for that, we are going to compare the last hour's output with the prior hour's output, and also the MFI output 4 to 5 hours back should have been also above 80. Only in that scenario, when in last hour the MFI output starts to drop below these say 80 level, we will look to initiate the trade. So that's the underlying logic is, and that is not being fulfilled here, so we have to go back in time to look for the examples where we might have got the trade as per our formation. Here we have the MFI above 80, and then it goes on to decline. But if we look carefully at SMA is not actually in decline. SMA is on the rise. That means we couldn't have taken this trade. Our algorithm would have not taken the sell trade. So again, we have to look for a new example. Here we have this case of MFI above 80, but it couldn't really sustain on the higher side and it dipped in the very next chart. And at least we need a consolidation of on the higher side of at least 4 hours. So that wasn't the case there. Here also the SMA is on the rise. Okay, so here we have this opportunity. The SMA is in the decline and for last 4 to 5 hours the MFI was indeed above 80 and then eventually it went into the decline. So that's how we will be looking to initiate the trade. So if we had gone in for the sale trade after the hourly close of 11 GMT, 11 GMT is this, somewhere here the trade execution would have happened with the stop loss being difference equal to the difference of these candles high and low. We would have gone into the entry here with the stop loss being above this high and it would have gone on to reach the target levels. Okay, so here we would have got a successful entry using this algorithm involving the simple moving average and the MFI. So I hope you got the point. Now we head back to the execution. We have to get the equal number of if blocks which we had used while defining the conditions for the execution of the buy trade. So here we had used 7. So that's it. 7 if blocks will be needed again, and after that trade command block. So I will take 7 of this. 1, 2, 3, 4, 5, 6, and 7. And after that open it. All right. We need line 10 to be less than line 15. So I will take line 10 and it should be lower than line 15. Okay, so first input less than second input. Okay, then we consider the MFI output values, and for last 1 hour it needs to have declined below 80, and in the second last hour it should have been above 80, and also 5 hours back it should have been above 80. So money flow index 15, money flow index 11, and money flow index 17 will need to be compared with the output value, second input being 80. Again 80 here. Here also 80. First should be less, first input less than second input. And from this block onward, it should be first input greater than second input. Okay, so first input greater than second input. All right, and after that, we have to consider the price volatility data. Now we need to check whether the last hour's closing level was below the opening price or not. So for that, we have to look at candle 18 candle close, candle 18 being the last hourly candle. And we have to consider auto created variables. Candle 18 candle close needs to be below candle 18 candle open. So first input less than second input. Okay. So we have defined these conditions involving the SMA, MFI, and the price action data. Now we have to consider the opening point, the trade entry point, and which will be the last hour's closing value. As soon as the price starts to dip below the last hour's closing value, we will look to initiate the trade. So for that, I have to again consider the candle 18 candle close and compare it with the 10-second candles closing levels. All right. Candle 18 candle close will be the common input. And candle 19 and candle 20's closing levels will be compared now. So I am going to take candle 19 candle close and candle 20 candle close. Candle 20 was the penultimate 10-second candle, so it should have closed on the higher side. First input greater than second input. After that, the last 10-second candle should have closed on the lower side. So first input will need to be less than second input. After that, we will join it to the trade command block, open at market. First input less than second input. Now let's get this arranged in few seconds time. Okay, so here we are, and then we join it to the multiple action to get the flow, trade flow going. Now we will have to define the input parameters for this trade command block, which we will do using these priorly defined variables. It should be a sale trade, so this command needs to be of sale. Default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage 2 pips is going to be fine, and stop loss and take profit level we will take as per priorly defined variables. The stop loss is going to be equal to the difference between the last hour's candle high and low, and take profit will be equal to twice of that. We had defined these both the variables last time around, so we are going to use as it is. So with this, the formation is complete. I hope you have been able to understand the logical explanation and then the execution explanation of this algorithm involving the simple moving average and the money flow index. So that's it from my side for today's session. For further coverage of the market developments, do check out the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. So all these useful links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.